Why invest in equity, also known as stocks and shares? So the terms are sort of used interchangeably. If you hear equity, they're talking about stocks and shares, and if you hear stocks and shares, we're talking about equity. So the first reason would be diversification. And in reality, every single asset that you look at would be considered for diversification, because the more diversified your portfolio is, the less likely you will lose everything if things start to move against you. And so that's really why diversification is essential, because don't put all of your proverbial eggs in one basket. You don't want all of your money in one asset or one investment, because if things start moving, you don't really have like something to fall back on, essentially, okay? Income, or more so long-term capital growth. So you can look to invest in equity for income to some extent in the form of dividends, right? But it's not as guaranteed, for example, as it is with bonds. What you get with equity is more so long-term capital growth. You would usually invest in companies that you believe their share price will increase over time. And when you want to sell the shares, the price will be higher so that you can make some returns. So the third reason would be liquidity. So these are very liquid instruments because they trade daily. And so what liquidity is how soon can you sell that asset and get instant access to your cash. So it's one of those where you can trade on the same day and you can get access to your cash as soon as the next day after you were trading.